Ladies and gentlemen of the crypto space, we are live on a Thursday, October 1st. We made it through September. What does that even mean? We're on the verge of I don't know what from a financial perspective. The House and the Senate can't get along and trying to figure out how many trillions of dollars to print. Manucci Bucci's over on the printing press. He's getting itchy. He's got his hand on the lever, and I don't know what to do, guys. Figure it out in Congress. Come on. I want to pull this lever. So that's literally what's going on. If you follow anything on like mainstream media, that's the metaphor. Manucci Bucci wants to pull that lever, but Congress can't figure it out between obviously, the president and the House and the Senate. This is proving very I don't know how many trillions of dollars I want to print, but man, it's funny when you look at Twitter and the very prominent persons that are involved with the equities markets and futures and digesting what potentially could play out and how it relates to how much money these clowns in Congress may or may not want to print. Hashtag hot mess. So we jump back over to Noah Talks, and we're going to talk about some sanity here, ladies and gentlemen. This stuff, to me, is sanity in a world of insanity in the legacy financial system. This stuff makes sense to me. Maybe it's because of my age. I'm not a boomer, and I'm not a millennial. I'm right smack in the middle. I was born in the the 80s, the early 80s, 1983. So this stuff just makes sense to me. So we're going to have some fun today. We're going to talk about how to get returns on Bitcoin, get yield, actual APY. Let's bring it over to the main screen. Who's in the chat? We got Lewis, Charlie, Nathan, Captain Weber, my man, Stelios, SB, Barry. Lewis wants to know what are some stable DeFi money market rates, please. Yes, that's what we're going to talk about. We're going to talk about something that'll produce around 10-15% on Bitcoin or strategy. Let's hit that because I'm a very I'm this is not no sushi games. This is not no whatever stupid stuff the kids are playing with. This is a legitimate investment strategy with risk analysis applied that we're going to discuss. This is late 30s. I'm 37. I don't have time for risk. I don't have time for messing with my financial integrity, my savings, my future. So let's talk about this. We're gonna have some good talk today. Uh, Sir Joe in the house. RR. Joe's in the house. Yes. All right. Let's rock and roll. All right. So we got the main screen up. We're talking about folks having Bitcoin. So you got Bitcoin. Everyone likely knows, hopefully knows the Raoul Pal narrative. The narrative. I mean, Lynn Alden talks highly about Bitcoin, and we know Bitcoin in our minds is in many regards a risk-off position relative to the legacy financial system. It's a way to check out of the legacy financial system and store value in something that's not a historic place to park value, and we think that it's going to appreciate substantially. So that it's a speculative position unto itself. But here's the kicker: it's a relatively dormant position. Bitcoin just sits, doesn't do anything. And for the last several months, folks have seen 10, 15, 20,000% yield in the almighty DeFi space. So what does that mean with regard to not fun and games? What does it mean with regard to legitimate ways that companies and projects have created to produce real yield? And real yield is yield not derived, I mean, fine, yield derived from inflation technically is yield if the demand exceeds the supply. If the demand does not exceed the supply, the yield derived from inflation is going to be destroyed as the value of the asset depreciates. It's going to drop in price because the inflation is going to there's going to be too much supply for demand, and that's going to drive the price down. So that I'm not a fan of yield derived from inflation, albeit that technically is what the Cosmos hubs are. And that's what proof of stake is. It's yield derived from inflation. But we're talking about the Cosmos hubs that I've mentioned, that I have, and that I delegate, are so early stage that when they catch traction, the demand will exceed supply. Anyway, let's not digress. Let's talk about yield through DeFi protocols to extract APY from Bitcoin. And where is the yield going to come from? So let's go to the end of the pipe first, which is very interesting. It's DMM, the DeFi money market, because these boys generate yield from real world instruments. So this is a company that has tokenized their financial management. So a person could get a part of the yield that the company generates vis-a-vis these Ethereum ERC20 tokens. So this is backed by loans. This is backed by auto loans, and I find so you can look into DeFi money market. You want to see what loans they are producing yield from, which nowadays is kind of scary. So that this is part of the risk analysis. If they're generating yield from auto loans, the vast majority of auto loans are subprime, and there's very much inherent risk in that. So people are running around talking about risk in the DeFi space when the subprime auto loan market, these CLOs, collateralized loan obligations, are basically the evolution of the CDO in the housing market. This whole system is about to unwind like a house of cards yet again, except not necessarily in the housing market, albeit it may happen in the housing market also, but in the CLO market, which is the auto loan market and just loans. They packaged the loans the way they did the mortgages, and they called it a CLO instead of a CDO. Do your own research. It's a very interesting topic, but that's where this yield comes from. And what catches the eye of a lot of people from DeFi money market is Tim Draper, who believes in the process, and he's a legacy financial guy that made all his money in legacy financials, that appreciates what crypto is doing, and he sees this as a great opportunity to get gains and yield from legacy financials and mix it with position client yield distribution management using the blockchain, which is quite fascinating. Um, so stick with the comments real quick. I don't want to go too fast. Stelios, I want to put my BTC to earn some passive, but I'm worried about. Yes, I'm with you, and that's Nadia Keys, Nadia Crypto. You goddamn right. So, what about the little guys, Noah? DeFi is for whales for now. Well, not entirely, not entirely. I'm going to talk about that right now. Uh, Nathan says, if that's Chico's wallet, you never know. But Mickmon says, I'm so DeFi, the degenerate DeFi, what's going on in Uniswap, just dial it out. Don't worry about it. I myself sometimes have trouble keeping up with it. Craig, who stops by the chat, likes to keep up with some of that stuff, I think. And John, who stops by every now and then, likes to keep up with that. I don't bother most of the time. I want to structure my portfolio in many regards like a traditional financial a person would structure their portfolio with risk-adjusted returns, risk minimized positions, with very strategic position sizing, considering risk analysis. So the vast majority of my holdings are in Bitcoin. If you want, probably, obviously, a major consideration for yield is BlockFi and Celsius. So as I mentioned in a Twitter post the other day, BlockFi will take 2.5 Bitcoin and give you a little over 6%. Celsius will take 5 Bitcoin and give you a little over 6%. So there's goal number one. Max out your Celsius and BlockFi 6% yield. Anything above 2.5 on BlockFi, 5 Bitcoin on Celsius, and I think you're going to get down in the 4%, which means there's reason to consider other types of strategies. So brings us back to DeFi money market. So risk analysis, you're dealing with smart contracts. You're dealing with smart contracts in the well, you're going to be collateralizing your debt position with Maker using wbtc. So your risk will be in the wbtc contract. We're going to be going from Bitcoin to WBTC vis-a-vis Ren BTC using the Ren bridge. You would use the WBTC Cafe, but there's no long-term risk in the contracts related to Ren, particularly because it's only a transient position in Ren. The Ren BTC is converted to WBTC using the Curve Phi liquidity pools. But your long-term maker CDP collateralized debt position is collateralized using WBTC. So first step, bookmarks, guys. Bookmarks wbtc.cafe. And this is the go-to. I've used this extensively. So this thing works wonders. As you can see, I've done a fair amount of, I don't know, there's more in here. There's a lot. A lot of this was just pure gains from this DeFi madness, and I was cashing out. I was cashing out my gains, taking profits, and risk off. And I'm not going to really pull up charts today, but Ren just popped. Ooh. But point being, this is a great tool to go cross-bridge. And this is a perfect initial example of the world that's coming to us. We're able to go from Ethereum to Bitcoin. We'll be able to go from Ethereum to Digibyte inevitably, Digibyte to Zcoin, Digibyte to 1,000 other UTXO chains. And this is where obviously Blocknet and StakeNet come in and all this wonderful world of interoperability. Video drop. Oh, what are you saying, Nathan? Look, yesterday. I see what you're saying. He talked about Rocket Pool yesterday. Yeah, I don't know. I don't know. I don't know about the rocket pool. I think we're so premature in F 2.0. I don't like speculative investing. I look at the charts. I understand the macro narrative to give myself a fundamental edge on what assets have strong fundamentals, and the timing, the time horizon for the asset is dictated by the technicals. If something's going to pop short term, you're going to see it in the technicals. If something is on the defensive, and I'm not going to take too much risk. Anyway, so back to DeFi. So I think that the best risk-adjusted returns right now to produce yield from Bitcoin is obviously BlockFi and Celsius. They're established companies that are producing yield by over-collateralized debt positions, basically, which is the same exact thing that MakerDAO is doing. MakerDAO does the same thing. You see this? MakerDAO does the same thing as BlockFi and Celsius, except they do it with smart contracts. So, okay, ladies and gentlemen, we use WBTC Cafe to turn Bitcoin into WBTC. Now, I'm not going to do this live on the stream because it takes a fair amount of time. It takes 6 Bitcoin confirmations. It could take upwards of an hour. Suffice it to say, I converted an Ethereum, I believe. Yeah, I converted an Ethereum to WBTC. I moved that into MakerDAO Vault. So what you do is you go to you connect your MetaMask. So let's start from the beginning. So you can there's 2 different ways to create a MakerDAO vault. I personally like both. DeFi Saver is really cool. And now here's a little bit more risk because now you have a third party interacting with the MakerDAO contracts, but their interface is very nice. I happen to like these guys, DeFi, DeFiSaver.com. So you connect your wallet up at the top. You go to MakerDAO on the left. You would create a CDP. It's on the top right here. You select WBTC. Let's say you did 0.1. Drop the debt. Drop it. So if you're doing 0.1 BTC, a tenth of a Bitcoin, and $1,000, I want my collateralization ratio to be much higher than this. I don't want no risk. This liquidation price, all right, fine, 6,000. What's the odds of Bitcoin going to 6,000? I want no chance of my over-collateralized position to be liquidated. So, all right, 6,000 is not that bad. I'd probably drop it down to like 300. No, I do 350. I like 300%. 375. All right, 375. So Bitcoin would have to fall to $5,600 in order for a liquidation. What's the you see, you can see the numbers more carefully here. Here, I have a screenshot. Let's go over here. So I created a vault a little bit earlier so I didn't have to go through this live on the stream. So the liquidation fee is 13%. So if my vault, if it goes to $5,000 Bitcoin, I will have to pay 13% as well as any losses incurred because of when my Bitcoin is liquidated to maintain the solvency of the MakerDAO uh, system. In addition, Bitcoin also requires a 4.25% stability fee year over year. So you're paying 4.25% per year to have this vault, which is going to come from your DAI. So you go over here, you go to manage vault. So the amount of DAI you have to pay back uh, to um, to cover your outstanding DAI debt is going to go up 4.5% a year. So next year it'll be 104.25 DAI I'd have to pay back. I wonder if that, I don't think it compounds. Maybe it clicks over. I don't know. That's interesting. Um, but suffice it to say, it's a reasonable percent considering the amount of yield that you can get. Now, if you want to manage your vault, I've been clicking back and forth between DeFi Saver and Oasis.app. You want to probably get accustomed to both of them because there's no reason you can't use both of them. I happen to like both, and sometimes I use one versus the other. Albeit, DeFi Saver does have this um, uh, automatic functionality that they've created with more risk, which is their own smart contracts, to automatically keep the collateralization rate optimal so you don't get liquidated. So I obviously have a massive collateralization. I would have the odds of this vault being liquidated are slim to none. Um, at a 402% collateralization ratio. So I'm at what I have 100 DAI that I have minted using my Bitcoin as collateral. And here's the kicker. Let's check the stream. Captain Weber says, "Oh, we have to pull up Ren. Is there pressure up or down from here?" You want to see Ren real quick? Ren is killing it. Ren's got nice support. It broke out from its sim triangle. It blasted through the 200 EMA in the 3 hour, and it looks like, look at that red candle, this wick down through the 200 EMA in the 3 hour. That's nice support. This, ladies and gentlemen, this is a perfect example of resistance flip support. Now, bear in mind, what is this? This means if you're a trading person, this is your entry. When you see this wick down, obviously the 3 hour candles. So you would this is where you get in. When you see this wick going right here, you see this little mouse action, and now the wick is above the 200 EMA. That's your entry. And what you do is you set a stop loss a little bit below the 200 EMA, and now you got a perfect trade. So you're all in gains. This is all gains. And worst case, you've minimized your loss. And heck, if you want, you do a trailing stop loss. And now eventually it gets up to here, and your trailing stop loss, boop, 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 and that's how you do it. Not that I do that with Ren. So Ren, unfortunately for everyone that follows me, is not something that I look at from really a trading perspective, which is why I didn't catch my eye too much this morning, because I do dark nodes rather than trading because obviously I was hot on Bancor and Kyber. They made a good portion of my gains this year. Bancor was up hundreds and hundreds, 1,000%, and Kyber did 1,000% also. Absolutely incredible. So those are more of trading positions. They just were so volatile. And not that Ren hasn't been volatile. It's just that they have a capacity to disrupt supply by incentivizing persons to lock collateral inside of a dark node. Pellet says, I know that isn't inherently today's topic, but you saw UBT on Coinbase custody? Yeah, UBT is really cool. So CoinGecko. So the problem with UBT is a big deal, and it always was. And Chico was always right. That's some serious stuff. But the problem is, who's going to buy it? couple thousand% for the year over year. That's why. That's why I've never played it. So I don't want to buy it up here. So, this is a type of position that I look at. I'm like, yeah, the UBT is going to be a big deal for companies and baseline protocol and mainstream corporate consumption of Ethereum and blockchain tech. But this is something that I'm not going to get involved with. Clearly, if I was in here at 10 cents, yeah, happy, happy, joy, joy, I would have a different tune. But we're way past that point. Maybe I'll chart it. Maybe I'll take a look at it. But this thing's ripping 20%, obviously. On what you're saying, Pellets, the Coinbase Pro news. It's a big deal. It's just something I can't look at everything. And even if I wanted to, I'd be spread too thin. So I ignore a lot of the crypto space. And that doesn't mean I'm missing out. That just means I'm looking for gains in different places. And no, listen, you go to an investment house, a brokerage house, they got a person that handles every different sector of the market because you can't possibly handle everything. You got there's 1,000 different types of bonds out there, and there's one person that handles certain types. You got to break it down, so you can't handle everything. The crypto space is just going to keep growing, and that's essentially what's going to happen. You're going to have brokerage houses handling various aspects of the crypto space because it's too big. It's too big to handle. Anyway, so I have 100 DAI that I have leveraged off of a zero point zero 0.04 wbtc position. So do you guys, let's break that down. I have 0.04 wbtc. That's what I have in my possession. Yeah, Pellets, it's really good, the tokenomics on UBT. The companies have to have UBT to participate. So that's good. I like them. I'm not going to look at them much. I can't promise I'll look at them. And Zill, good, good. I'm happy. I'm happy. Listen, you find something just because you found it and it didn't come through me doesn't mean that's not awesome. Good stuff. What the whole takeaway from this show is supposed to be education about how you look at projects, how you identify good opportunities, how you minimize the risk, how do you look at strong fundamentals, how do you protect your damn gains by looking technicals. That's the whole point of the show, not to point out specific assets necessarily. That's my opinion. If we're talking about specific assets, that's my opinion of what I'm interested in. You're all going to have different things you're interested in, and that's fine. Don't follow. Find your own narrative. Find your own story. Find your own shit that makes you happy and excited to deal with financials. Now, I love this shit. I love these over-collateralized debt positions. I'm very happy. It took a long time for me to get comfortable with BlockFi and Celsius, but I got my positions in there. 6% I'm earning on 7.5 Bitcoin. I do have a 32 Ethereum chip locked up in Celsius. Although I do get tempted because 32 Ethereum earning 6%, whereas I could put that directly into DeFi money market, Ethereum. Then I would get 6.25% on the MF, and then with using their obviously their governance asset, I could get an extra 13.36%. So we're talking about 20%. So I'm getting six and change percent from Celsius on Ethereum, but I could pop it over here and I could get 20%. So what does that mean? That means you have to consider risk versus reward. The risk is that instead of dealing with Celsius, which is a somewhat trusted entity that has a track record, a history, a presence on social media, versus DMM, which also has a track record, a history, a presence on social media, but instead of a company being responsible, a centralized organization being responsible for your assets, you're dealing with smart contracts and Turing complete smart contracts. What does that mean? That's your analysis. That's the choice. That's the risk. Do you want to risk, 10 grand for 20% gains per year? How much risk is your tolerance, your threshold? And this is fascinating. And this is what I find myself thinking about. Instead of what assets, what's the new hot asset? Do I really want to get into UBT or not? Energy Web, it's going to change the world. Do I want to get? No, I know they're cool projects, but I find myself more fascinated with how to structure my portfolio to generate yield. I want I want to be able to not work on 6 to 10%. And if I can get 6 to 10%, I think I can. How much money do I need to accumulate in order for me not to work getting 6 to 10% yield per year? What does that mean? And how do I get there? And that's what I think about. Maybe it's because I'm moderately old. Moderately. I still got some pep in my step, ladies and gentlemen. Yes, RR, you are in 100% control of your keys. And this is an interesting one. In DeFi, you're in control of your keys. With BlockFi and Celsius, you're not in control of your keys. But in DeFi money market, you have your keys. This is, look, I have my MetaMask connected on top. It's as simple as that. So check it out. So this is where we are. I have 100 DAI that I've leveraged from a zero point zero 0.04 wbtc collateralized debt position on MakerDAO. So I have 100 DAI in my wallet. I also have my zero point 0.4. So let's say I got 10 Bitcoin. I got another 10 Bitcoin, and I want to get another. I want to leverage 25,000 DAI. I'll have my 10 Bitcoin. This will say 10 right here. But then I could put 20, it'll have 25,000. So I'm getting this 25,000 plus I still have full control over my 10 Bitcoin. So now we're going to go over here. We're going to go to DAI. We're going to hit max. We're going to mint. Let's do it. Wow, I talk a lot, but I'm finally getting to actually pressing something. I want to mint this. Let's mint MDAI. Let's make sure it goes through fast. Damn, what are gas prices doing? What the heck? Okay, transaction started. We're going to mint some MDAI, ladies and gentlemen. Got 100 DAI in here. That is a leveraged position from my zero point zero 0.04 WBTC. And my zero point zero 0.04 WBTC, I could convert to Bitcoin. And that's the whole point. And look, there's your transaction. Oh, I think that was probably an approval. Ugh, $9. All right. So DeFi does price out a lot of people. Look, I'm spending $9 on a transaction fee for a $100 DAI transaction. No. Well, clearly, if I'm throwing around 25 grand, a $9 transaction is relatively trivial. But 9% for a transaction fee. So that's why it does price. Who said it earlier that it's quickly pricing out people? And you're absolutely right. It's quite unfortunate. Stelios, yes, on one. We should find them. Yeah. So I love my 200 EMAs. Now clearly there's a lot of different EMAs, SMAs, and just MAs that people like. People like the 50. I really like the long term. I like big picture. I love the 200 EMA. I find it just the most meaningful moving average in my experience. Bear in mind, I don't have the longest history in trading or technical, so maybe my experience is quite limited. But that's just what I look to on the chart that catches my eye the most. Um, okay, where's my transaction? Let's see. Um, I like to go to 1 inch. It tells me the instant transaction price. Oh, it's 11:57 already. 123. 123. So let's go up here. Let's go to our existing transaction. Let's go to speed up. Let's go to advanced. Let's go to 124. Let's save it. Let's accept. All right. So that, there you go. There's your transaction. So now I have 96.39 MDAI, which is earning 6.25% interest per year. Is that APY? I'm saying APR, so it might not be compounded. I don't know what their subtleties of their policy are. Okay, so let's unlock our MDAI for their DMM governance token farming. Let's go 124 on the gas so we get a quick transaction. I have absolutely no patience. I just pay the instant transaction fee, which usually takes about 30 seconds. 30 seconds to a minute, give or take. But it's pricey. Pricey, pricey, pricey. DeFi Saver. I like those boys. That's a nice. They've spent a lot of time on that. I know how much effort is required for software dev, and it's a nice presentation. All right, it's almost confirmed. Come on. Okay, there we go. All right, let's refresh. Okay, let's switch to DAI. Very nice. We're going to take our balance. Oh, I unlocked USDC. Damn it. Sorry, guys. I'm going to stay on and finish this with you guys, though. 124. Okay. All right, give it another second. We got MDAI unlocking. Right, Charlie? Right? You know, most people on the stream don't stay for the full 30 minutes. Most people, like the vast majority, drop off at 15 minutes. And I'm like, how the hell am I going to cram all this information into 15 minutes? I have no idea. It's just strange. Okay, MDAI, we're going to go here. I have to unlock DAI also? Okay, go figure. I'm doing this the first time, just with you guys. 124, let's do it. All right, give it a second, give it a second. RR says, how about you launch a NOAA Wi-Fi governance? No, I don't want to sell people things. Um, I thought about it. I could do an ICO pretty easily, actually really easily. It's kind of doesn't require much effort at all nowadays. Um, just something I'm not interested in. I want my damn portfolio. I want my portfolio to generate enough money so I don't have to work jobs anymore, and then I can spend time with my family and relax and all my entire. I want my entire job to be to manage my portfolio and tweak my yield. That's all I want it to be. All right, so apparently I need an additional 106. That's curious. So I need a certain amount of MDAI and DAI in order to farm. I don't know the subtleties of their program, but I need 100 and let's get 100. Um, pretty sure I have enough Ethereum to get 100 DAI. Let's go here. What do I got? I got 1.2. I'm gonna have to stock up on some Ethereum. 7%, $7 per transaction. Well, it's good for a good cause. View in Ethereum. Oh, look, and then typical. Is that a failed transaction already? I believe it said a failed transaction. Ah, there goes $8. Joy. 100. Swap. Swap confirm. 24. All right. Almost there. Charlie says a lot of the time I can't stay, but I make sure I watch the show later. It's all good. It's all good. I try my best. I try and provide people content, and this is also a good way for me to digest really what I think I understand. All right, Uniswap is being horrible right now. Double failed transaction. Uniswap, you just cost me $14 because you can't get an excessive input amount on $100 worth of Ethereum. Thank you, Uniswap. All right, so point being, DeFi money market has caught my eye. So what you're seeing there is those tabs reloading because of the Great Suspender, which is actually really cool. It suspends the tabs automatically. So if apparently you could use leverage from MakerDAO to generate DAI, take a portion of that DAI, convert it to MDAI, and then you're able to farm for 26.19% interest, in addition, obviously, to your MDAI yield. Which is significant. So you get it if you're let's say you're 300% collateralized um, on Oasis Maker, and so it's going to be about 30% of 30%, give or take. So one Bitcoin would be um, 10 grand, let's say. 300% over collateralized to be very safe. You get 3 grand. Um, and you're going to get a third of that, 1,000. So you're going to get about 10% yield on your initial Bitcoin. So 10% yield on Bitcoin, ladies and gentlemen, that's quite fascinating when you put the entire sequence together and you see what the calculation of the overall APY will be. And DMM, I'm sure, is going to be compounding. I'm pretty sure. And if you're worried about that, if you're worried about any of these, the risk analysis, then you go over to BlockFi and Celsius and you get about 6%. And that's the name of the game, ladies and gentlemen. All right, I thank everyone for joining me. 12:05 on a Thursday, October 1st, the start of a new month. Please, everyone, click those thumbs up. Tell everyone to subscribe. Let's get that subscriber count up, and it's always a pleasure. I look forward to talking about anything you guys want tomorrow. If you guys want me to talk about this shit again, I'll talk about it again. Happy to talk about anything. Hit me on Twitter. We're going to have fun time, and we're going to do it again tomorrow. Y'all have a good one now. Peace.